In this video, we will learn how to prepare income statement using IFRS standards. In this video, I just prepared the income statement. After this video, I will prepare balance sheet and cash flow statement. Without wasting the time, let's move. So, this is the income statement under IFRS standards. This is the trial balance with linking the journal income statement with linking the trial balance as well, and this is the journal entries I have passed just for time saving purpose, and this is the standards under IFRS. So first entry I have passed sold goods on credit under IFRS 9 and 15. Why I have posted this entry into these rules? So let's go. Revenue from contracts with customers. Under IFRS 15 explains when and how to record revenue. It follows a 5-step module: identify the contract performance obligation, transaction price, allocate price, and recognize revenue when goods or services are delivered. Here I deliver the goods. I have sold the goods. That means the goods are delivered to the customers. Now the account receivable I have debited here, and the sales revenue I have credited here. Why I have credit this one? Why I have debit this one? So if you wanna check this why, so you can check my previous video, what's the function of debit and credit, which one goes debit and which one goes credit. It will clear you best. Link in the description below. Now the second entry I have passed sale, cash sale under IAS 7, the statement of cash flow. Cash flow statement: any cash or bank transaction receiving customer payments, paying suppliers, repaying loans, or investing must be shown under operating, investing, or financing activities to explain how cash is generated and used. Now the bank debit, sales revenue, credit. Sales return from customer under IFRS 15 we have discussed before. Sales return debit, account receivable credit. Account receivable, here you can add the particular person name, which one the customer you had. Purchase inventory on credit under IAS 2. Inventories deals with like our raw material, work in process, and finished goods. It says inventories should be valued at the lower of cost or net realizable value to avoid overstating profits if prices drops. Now the fifth entry I have passed pay to suppliers. Here I were purchased on credit basis. Now I am paying to the supplier. In this entry under IFRS 9 we have discussed before, and 7 also we have discussed before. Accounts payable debit, bank credit. Freight on purchases, it's a expense account under IAS 1. Presentation presentation of financial statements explains how to present financial statement like the balance sheet, P&L, other comprehensive income, and equity statement. It ensures proper classification of assets, liabilities, income, and expenses to give a clear financial picture. Now the second entry I have passed Flight expense debit, bank credit. Office rent paid, it's also an expense account. Salaries, it's also an expense account. Thing here, but one thing in this, but one thing in this different. Under IAS 19, employee benefit. Explain how to account for employee benefit like salaries, bonuses, pension, and gratuity. Short-term benefit go to the P&L, while long-term obligation like pension are recorded in the balance sheet. Under IAS 7, we have discussed before salaries expense debit bank credit. Utilities paid, it's also an expense account. Internet and communication bill, it's also an expense account. Advertisement, advertising expense, it's also an expense account. Training and development, it's also an expense account. Bank loan received, now it's a loan received, we have discussed under IFRS 9. Now the loan under IFRS 9, financial instruments, classification, measurement, impairment, and hedging of financial instrument. For example, it covers investment in shares, bonds, loans, and receivables. It also sets rules for recording expect credit losses on loans. Bank debit, bank loan, which bank you bank debit, bank loan, credit. Here you can add the bank name as per the requirement. Loan processing charges, loan charges expense, debit, bank credit. Interest paid on loan, finance cost, debit, bank credit. Commission, income received, it's an other income we received in this business. So bank debit, commission, income, credit. When the income increases, it will be credited. Scrap sales, it's also another income. Bank debit, other income, credit. Provision for income tax expense debit, income tax payable credit. I didn't pay the income tax here, so I passed the entry payable account. Tax paid debit, income tax payable debit, bank credit. Prepaid insurance debit, bank credit. Purchase machinery, property, plant and equipment machinery debit, bank credit. Purchase software license, intangible asset debit, bank credit under IAS 38. So intangible assets deals with the non-physical assets like software, patent, license, and trademark. It explains capitalization, amortization, and impairment testing for these assets to reflect their true value. Now the under IAS 12, income tax. Income tax, how to record current tax and deferred tax when accounting profit not equal to taxable profit. We recorded deferred tax assets or liability. This ensures future tax effects are reflected properly. I think 16 we have discussed before, not yet. Property, plant and equipment, tangible assets like building, land and machinery. It explains capitalization, depreciation and revaluation. For example, when we buy machinery, we capitalize it and depreciate it over time. Now the amortization on software, amortization expense debit, accumulated amortization credit, furniture under IAS 38, intangible asset we have discussed before, furniture purchased, property plant equipment, furniture debit, bank credit under IAS 16 we have discussed, depreciation on furniture, depreciation expense debit, accumulated depreciation credit, provision for doubtful debts, bad debt expense debit, allowance for doubtful debts credit, write off bad debts against allowances, allowance for doubtful debts debit, account receivable credit, occurred salaries expense debit, salaries payable credit, occurred utilities expense debit, utilities payable credit, fair value other comprehensive income investment purchased debit, bank credit, unrealized gain, fair value other comprehensive income investment debit, other comprehensive income reserves credit under IAS 21. Effects of changes in foreign exchange rates, foreign currency transactions. If we trade or hold assets in a different currency, exchange gain losses must be recorded. Some go to the P&L while translation adjustments for foreign subsidiaries go to other comprehensive income. Unrealized loss, fair value, other comprehensive income reserve, debit, fair value, other comprehensive income investment credit. Foreign currency translation gain, receivable, foreign currency year, FYC, receivable, FYC debit, other comprehensive income reserves credit. Sold old machinery, we have discussed this rule before, bank debit, accumulated depreciation debit, property plant equipment credit, gain on disposal credit, audit fees paid, audit fees expense debit, bank credit, employee bonuses provision, bonuses expense debit, bonuses payable credit, bonuses paid, bonuses payable debit, bank credit, loan principal repayment, bank loan debit, bank credit. Before we have received the loan, now we are paying the repaying back to the loan. Closing is stock adjustment, inventory debit, cost of sales credit. Here I have passed mostly entries just for the clarification. Now here I have prepared this one for the now here I have prepared this one for the better presentation of income statement, balance sheet, and the cash flow statement. This one helps me to prepare these statements individually one by one. So in this video, I have just prepared the income statement. After this, I will prepare the balance sheet and the cash flow statement. Now is equals to sum if journal this F4 freeze comma here this comma journal this freeze bracket close enter. Now copy and paste the formula here, and if I wanna this sum if bracket open journal this f4 comma this comma credit side F4 for freeze entry. Copy and paste the formula here. Now here debit minus credit, copy and paste the formula here. Now the same, I created this like that. Now the income statement I have created. Sumif trial balance sales revenue. I wanna this one, so I type here sales revenue trial balance minus Sumif trial balance sales revenue trial balance this. So I wanna this value 1700 sales return 80. Now the net revenue sales minus sales return less cost of goods sold gross profit. They are the operating expenses. I have linked with the trial balance. This is the total. Now the earning before interest, tax, depreciation and amortization before I reach this. Now the depreciation expense this, amortization expense this, earning before interest and tax, operating profit I have this, finance cost this, profit before tax this, income tax expense this, net profit I have this, other income I have. Why I write here multiply by minus 1? Because it's a negative value. I have converted this into, let me, I will show you. This is the negative value. Now I wanna convert this into positive value, so I have type here minus 1, this one also. Now the total net loss I have 1720. Here the main thing, this the IFRS standards required the other comprehensive income in P&L. Fair value I have linked with this with the journal. This one also I have linked with the journal because it's FX translation FX translation gain. I link with this also journal. Now the cash flow hedge reserve. Hedge USD payment for future imports, unrealized fixed FX gains losses first go to OCI, then move to PNL when payment happens. Here I didn't have the any hedge reserve, so I didn't posted here this one. If you have, you can add this in it. Accrual gain losses, if any, I didn't have, so I didn't add it here. If your gratuity or pension liability changes due to accrual assumption, the gain or loss goes to OCI, not PNL. So total comprehensive income I received the 1480.